Hey everyone, welcome back to Finance Flicks Hub, your go-to place for sharp market updates, trading ideas, and financial insights you can use. I'm glad you're here. Today, we've got a lot going on. Strong earnings from Nvidia, key commentary from the Federal Reserve, fresh job data, and crucial levels in the market that could tell us where things go next. So buckle in, because this is important. Market overview. Some good news kicked things off when Nvidia delivered strong earnings that gave markets a moment of relief. But that relief didn't stick. As the day progressed, broader selling pressure came in. Why? Because the Fed and economic data raised doubts, and the message for investors shifted. We might be heading into December with fewer tools than expected. Bottom line, we're in a fragile place, and if key levels don't hold, could see some serious downside into year-end. Federal Reserve update. Here's what the Fed is signaling. Fed Governor Lisa Cook put the spotlight on risks, high valuations in stocks, corporate bonds, housing, and leveraged loans. She also warned about liquidity risks tied to hedge funds and noted that AI could both help and hurt markets. Accordingly, she didn't promise a policy save, meaning the market got nervous. So her comments are part of the reason why the optimism from earnings is now meeting pushback. Jobs report and rate expectations. The most recent job numbers are eye-opening. The delayed September jobs report showed an increase of 119,000 new jobs, stronger than expected. The unemployment rate ticked up slightly to 4.4%. What this means, a stronger jobs market means the Fed may feel less urgency to cut rates in December. The probability of a rate cut has dropped from around 80% to under 40%. As a result, investors are digesting that rates might stay higher for longer. This changes the calculus for growth stocks and risk assets. What's driving market weakness plus current flags? High valuations and AI tech risks. The massive run in tech and AI has everyone asking, is it priced for perfection? It's risk off via crypto and speculative assets. For example, crypto like Bitcoin and other speculative trades are under pressure, which tends to hurt risk appetite broadly. Global volatility, mixed signals. While parts of the U.S. economy are holding up, there are still question marks, data delays, geopolitical uncertainty, policy unclear, market structure and rotation concerns. Some sectors are breaking support. Others aren't. Getting buying interest. The breadth of the market is looking weak, which is a concern in its own right. Key levels to watch. SPY, S&P 500, broad market. Resistance around approximately 674. Support around 650 to 654. Failure to hold support puts downside risk on the table. QQQ, Nasdaq Tech, very near the 100-day moving average and a key support level near 243. If that breaks, it opens up a potential move toward approximately 583. SMH Semiconductor ETF, SMEs, have been the backbone of tech strength. SPY, the range has been approximately 330-350. If support is lost, risk could reach 300. Roughly a 10% drop because semis are under pressure. Bitcoin and speculative assets. Support zones around 83,075K for Bitcoin. If those break, that amplifies the risk-off tone. IWM Small Cap ETF. Support at approximately 230. If that breaks, next major zone approximately 220. Broader market structure. The charts are showing lower highs and lower lows on 4-hour and daily time frames, which is classic bearish. Until we see a meaningful break higher, assume downside risk. Short-term market outlook. The trend right now, lower highs, lower lows. No strong bounce yet, and strength only shows up when support is reclaimed. Bearish momentum is the default until proven otherwise. In plain terms, unless we see SPY get up above approximately 254 soon, the path of least resistance is still down. Combine that with large intraday swings for 5% or more. And you've got a market that's sensitive, fragile, okay, and prone to sharp moves. Stock-specific opportunities, current weakness, focus, meta on the weak side. Key support approximately 570. If that breaks the gap, fill toward approximately 549 is in play. Palantir PLTR, watching support near approximately 149-150 in its 200-day moving average. Amazon AMZN, one of the weakest large-cap names, targeting approximately 215. Its 200-day moving average if selling continues. Tesla TSLA, under approximately 414, is bearish. Potential downside, approximately 384-360 if breakdown accelerates. KMD, AMD, below approximately 214, opens up downside potential, approximately 160-170 if momentum persists. K. Nvidia NVDA, still near highs. No clear short trade unless it breaks a much lower anchor, approximately 167. Netflix NFLX, if below approximately 106.5, no major support until approximately 100. Watch that zone. Google, trading above previous highs. Absent a breakdown, no urgent trade. Volume and market internals. One of the warning signals, volume on the downside, has been elevated. We've seen sustained selling from late morning into midday in the U.S. session. That isn't just a quick sell the news event. It suggests sellers are committing. When you see volume lift on, declines and little on bounces, that tilts risk toward more downside rather than a clean bounce. Conclusion, takeaway, putting it all together. Earnings from Nvidia gave us a moment of hope, but the backdrop is filled with caution. A strong jobs report, no guarantee of Fed cuts, high valuations, and weak breadth. The market is under pressure across multiple fronts, from tech and semis to crypto and small caps, unless we see a clear break above key support zones and strong buying come in. The risk of a deeper pullback remains very real. Stay alert, stay disciplined, and keep risk management front and center. Outro. Call to action. Thanks for watching here at Finance Flicks Hub. If you found this update useful, make sure you hit that subscribe button and ring the bell so you don't miss our next market breakdown. We'll be back soon with fresh analysis, trade ideas, and market insights. Stay smart out there. Happy trading.